One of the things that needs to happen is a bit more awareness of water as a lucrative investment thesis. So we need to see more water deals. We need to see more water in the news, to put it bluntly.
Our first full exit was a 40-some% internal rate of return. We had a partial exit that was a 2x. We have in our current portfolio, if I had to pick what I think is going to be the best outcome, it's going to be 4 or 5x inside the next 18 months.
Back in December, we got privatized. Is $1 billion the figure? I think that those numbers are certainly achievable for our trajectory right now.
Water has to become sexy, or sexier than it is now.
Those traits are making us a fairly phenomenal growth vehicle for investors such as Ember.
The people at New Mountain and Sun and KKR and Ember, another one from last year. These people are not stupid. They're really smart people. And they've already made fairly totemic bets within this market. And I think they're right.
Being specialist investors in a specific industry, we are, Tom is, I am, on different levels. We do have an opportunity, and the opportunity is greater than it ever was. And money is coming.
If you had that type of return on some tech thing or some other type of technology, it would be trumpeted all over the place.
Maybe we haven't put the capital into play that you could, Mr. Big Investor, but we have actually gotten those returns that matches whatever you got in renewable energy, whatever you got in energy, then they will listen.
I would certainly not feel comfortable directly myself in investing in regulated water utility companies. It's not something we have a direct experience with, so
I'd say invest in science until you sort of figure it out.
We bring them in to review the finalists. Is it a fundable company? Because there's no point in spending a lot of time with a company that may have a great technology, but a for-profit investor, which is critical to that tech company's future, would look at it and go,
If you want to place impact capital, come to guys like us. Don't fund a GP who's a generalist and who just call himself impact investors, because they're going to get smacked. It's happening.
There is no secret water investor handshake or club that we're aware of, at least.
Hello, bonjour, and welcome to the Don't Wastewater podcast. This special episode is brought to you by my sponsors, Science Water and Simple Labs, so thanks to them, and more to that in a second. I'm your host, Antoine Walter, and if Clayton McDougall is right, and there's really no secret water investor club, then this episode is probably the closest there is to opening one, as you'll get to hear from investors all around the water map, from early-stage water specialists to the infrastructure private equity players, through the strategic expansion actors, the non-profit impact investors, and even the PE targets that in turn become the consolidators of the water tech's growth stage. Trust me, all of that will become much clearer in just a second. If there's one thing they all agree on, it's that something is happening in the water sector, especially on its investment side, so rather than telling you to watch this space, I thought I'd do it for you. And this episode is somewhat the second part of a trilogy that started with my review of 7 years of growth stage investment, and will continue in a couple of weeks with the first appearance on this microphone of a very, very active, dedicated water investor. I'll keep the name secret for now to build up the expectation, but you can try to guess it in the comments. Now, before we get too carried away with excitement, we should acknowledge that yes, something is happening, but let's understand where we're starting from, which Alex Lukopoulos from Science Water very accurately summarizes when he says that
the water sector is confusing, right? You've heard me talk about the Rubik's Cube. I mean, that's literally where we started, which was we saw Rubik's Cube and we tried to demystify it and try to simplify it, which at the end of the day, you can. So I think a lot of people get stuck in, I can't solve the Rubik's Cube, I can't solve the Rubik's Cube, and they need, a few of that algorithms to guide them to solve the Rubik's Cube. But then when you solve the Rubik's Cube, you realize I need to also put a bunch of the different pieces together to get the real confidence to do it. And that's sort of something else that we've been able to do, and we try to do with the conference, is put those different puzzle pieces together. Once you understand the algorithms, then the solutions come. In other sectors, you have different barriers, but it's certainly not as complex as algorithms and the Rubik's Cube and putting different pieces together. And I think a lot of investors shy away from both of those. And that's why we do the conference, so that people can understand that, hey, either invest with science or work with science or learn from science and try to do it.
The conference Alex refers to is the place I cut most of these interviews, the Rethinking Water conference organized by Science Water at the Columbia Water Center in New York. Over the past years, it's become my go-to space to connect with the who's who of the investment actors within the extended water sphere. And if New York is a bit too far away for you, Science is taking the conference on the road this year, so you may be able to catch up with the money people closer to you in a not-so-distant future. When Science kicked off the series and their partnership with the Columbia Water Center in 2019, though, ago, they published what they called the $1 trillion water infrastructure issue or opportunity, depending how you look at it. In half a decade, it transformed into a trillions with an S topic. You may recall that GWI coined it the $12.6 trillion questions looking 10 years in the future, and regardless of the number of S you put at the end of trillion, the S-curve aspect of the opportunity also calls for many more people joining the investment crew because...
Going back to that trillion, science won't be managing $1 trillion. Hopefully there'll be others that join, and hopefully they'll get the confidence to do it, because it took us a while to sort of get to this point. As you've seen, we've tried to talk about it. But I think the one thing that stayed consistent is our focus and our sort of track record in organization, right? And being a positive impact. Those three things have been consistent and will continue to be consistent in science. And I think those fit really well with the water market.
Yes, they fit. I fully agree with Alex, but so far, if water's on the agenda, it's not yet in the books. As I discussed with Robin Castelli, the head of transition finance investment at Orange Ridge Capital, a private equity fund that's yet to invest in water.
Well, water investment is clearly foundational to so many investment theses within the climate and the transition finance space in general. It is an area that is absolutely key to any sort of long-term investment proposition we have. The question of whether to go to a specialist or do it directly is a very important one. It really depends on the type of deals we're looking for. If it's infrastructure, if it's technology, if it's software, I think it's a nuanced answer. So I would certainly not feel comfortable directly myself in investing in regulated water utility companies. It's not something we have a direct experience with. So I would probably go to a science water type fund that has done that. But if it's adjacent to our expertise, it would be something that we could do. So if it's in the area of certain kinds of things that we know, then of course. So I think it's a harder question to answer than black or white, as often is.
Water investment is somewhat of a pyramid. You can invest in the base of the pyramid, which would be the regulated utilities, turns in a revenue every year, is going to be stable, never going to be disrupted. On the other end, it's never going to make big money.
Certainly, yes.
On the very other end of the pyramid, you have some super promising water tech startups, which might be the next big thing and go through the roof, but might as well die within 2 years. Within that, would you be looking at all the various levels and mitigating a risk by being everywhere, or would you focus on certain layers of the pyramid?
Well, I think it depends on what the risk appetite and what the multiple invested capital targets for the fund are.
For you specifically?
For our fund specifically, we tend to be relatively risk averse. So we always want to have a base of steady, relatively risk-free returns. So we would go for a blended approach. We would have, if we were investing in such a strategy, we would go for probably a 60%, 70% in water utilities, which would provide sort of the guaranteed return to a certain extent. And then we would put some bets higher up in the pyramid at smaller and smaller percentages. You are taking the risk, but you're not betting the house on it. There's many technologies in the water space without going to the extreme tech. There's technology to reduce water leakage. There's all of these things that are a lot less risky than strange desal plants in the desert or things like that might or might not work. But there's a lot of water tech that is not necessarily high risk at the moment. So as a PE shop, we can't really afford to have zeros in our investments. So we always have to invest with that type of mindset.
So that's somewhat a first nuance to the S at the end of trillion. For now, the water space is still potentially a risky area for PE players and not yet their playground. As of now, and even if there are clear signs of that currently changing, water is still a specialist play, which is confirmed by one of these specialists, Brian Iverson from Chimbra Capital.
I believe I know that us being specialist investors in a specific industry, we are, Tom is, I am, on different levels. We do have an opportunity, and the opportunity is greater than it ever was, and money is coming. I'm not necessarily surprised that it's almost more an allocation and an execution issue than it is can you find the money, because we are learning as a society, and investors and governments are learning that you can go there and and you should, and you can actually make money. In between the capital and the operating company, there has to be GPs who understand what they're doing. We have to continue to be good at selecting operating companies that can go somewhere, not only for us, but to prove that the whole thing is plausible. That's the only way that allows the capital to keep coming. That's why I think we're much better off than impact investors, because there's impact investors in the space who just, their top line, what they think about is to do impact rather than make profit and make a difference. And I think the impact investors, as a general rule, are going to lose money. The turn I'm taking is, instead of saying that the venture capitalists in my space are in trouble, I'm really saying that being a specialist investor in water is a very, very good thing, and it's definitely a place to be. So if you want to place impact capital, come to guys like us. Don't fund a GP who's a generalist and who just call themselves impact investors, because they're going to get smacked. It's happening.
I looked up the investment database from 2018 to today. What surprised me the most is that out of the about 900 something investors which I identified, 780 cut one check. They had water as part of the investment thesis. They put a check into a water company, they tick the box, and that's done.
It disappeared. Most of the time when somebody only cuts one check one time, it's because it didn't go so well. I mean, isn't that what you're saying?
Could be a reason as well.
Yeah, that's what it sounds like to me. If somebody cuts a check and it goes well, you go again. Repeat investment is, everybody loves it. Like if it's going well the first time, you go again, right? It's easier than start something from scratch. And I think that is changing. So I do think that's changing. I do think that we're starting to see outcomes that we can be proud of and that will allow for in continual investing. I think that's new. You're not moving anything if you're not making it profitable. Not because profit is everything, but people have to work and live and make money. So if we can put some money in and time in and we can make something out of that, then we want to do it again. We need to get away from the fact that everybody's only cutting one check. But I do think that's different. And I think Tom is going to prove that he's one of the best investors, venture capital investors in the space.
And with that Romans transition, I don't have much else to say then. Let's listen to Tom Ferguson from Bertel and Ventures.
It matters in that it is a very helpful lagging indicator of the overall market's judgment of the quality of the arguments being put forward by people who are starting companies within water. I think there's a pretty big asterisk here, especially in terms of, people who those of us who spend, a lot of time like outside things like, oh, look, we're valorizing this stream of something that is aqueous in order to extract kind of magnesium and lithium out of it. Is that necessarily a water company? I don't know. So like, as with all of these things, wherever the numbers stay, but regardless, like, more people are making bets in water and, that can be only a good thing. But it's certainly by no means, I think, the most encouraging thing about last year. But it's always helpful. But I won't say, I don't think it's going to move the needle really with people who are still kind of sitting on the sidelines, whether it's LPs or other GPs, or it's useful, but it's definitely not seismic. But I don't think that's a claim that you're making.
So if the increased interest and the growing investment numbers aren't the decisive criterion to move the needle for investors still sitting on the sidelines, what would convince them to jump in? You're saying if you were to invest. Does that mean you're sitting on the edge and wondering if you should go into that, or do you have a plan as to how you roll that out?
We are a transition finance shop. So transition finance is a very vast and it covers many different areas. So given capital is not infinite, we have to select which theses we do. So our primary focus for the next year or two is mainly on biomass and sustainable forestry and sustainable agriculture for the first couple of years. We're looking at water with a very keen eye because it underpins everything. So water is, for us, the next obvious step in an expansion process. That's why I'm saying if, in terms that we're not doing it today, but it is clearly in our plans for expansion, and an area where there is a ton of potential. The markets will grow dramatically, the investment will grow, and therefore it's a natural expansion area.
What do you need to see from the market side to decide you to think, oh, it was on our plans anyways, but now it's happening because we saw this, and this, and those were the triggers we wanted?
One of the things that needs to happen is a bit more awareness of water as a lucrative investment thesis. So we need to see more water deals. We need to see more water in the news, to put it bluntly.
When you say water deals, it's like an exit from a company who proves that it was working, or
it could be exits, but it's generally deal flow. In a way, water has to become more front page news. Now it sort of has this thing of not really being talked about. It's there, it's done. Politicians would rather put in a new park because that's what gets them elected, as opposed to putting money into water. There needs to be more awareness that water is critical and the value of water as a resource and the infrastructure that goes with it. As a fund, we need to then go raise capital with our own investors. If it's an investment thesis that they are familiar with and that they've heard about and they've seen in the news and they've seen publications about, then it's a much easier sell. If we go and say, we need to raise 500 million to invest in water, or 300 million, whatever the number is, it's easy if they say, oh, I've seen this on Bloomberg, I've seen this on Yahoo Finance, I've seen this here and there, as opposed to say, you want to invest in what? Oh, nobody invests in that. No, go away. So that's fundamentally the big challenge, is water has to become sexy, or sexier than it is now. Now it's sort of dull. In a way, I mean, not in a disparaging way, but it's really seen as oh yeah, of course, water. Nobody gets excited about it. People need to get excited about it.
Okay, now, as much as you understand what Robin Castelli means by saying that, we have to acknowledge that some infrastructure funds actually show an increasing interest in water. We had Pennybacker Capital Management taking over Cambrian Innovation last year, and quite a bunch of interesting to exciting moves, among which I'd certainly not place H2 Innovation's acquisition by Amber Capital in the bottom section. And it's a good thing, because the next one on my microphone is Guillaume Clairet, H2 Innovation's COO. What gets you to get privatized, and what does it change?
This is new for us still. It's still less than a year, but we're really excited with the partnership we've established with Ember Infrastructure, our new majority owner. But we also, kept two institutional shareholders, CDPQ and Investment Quebec, as part of the shareholder group. They were longtime investors. So we really have the best of both worlds. We have like a young, dynamic fund that wants to help us grow. And then we have sort of the legacy knowledge of the company that brings continuity at the ownership level. And really what it does for us is that it allows us to put the energies and the focus of the executive team more towards like our clients and our team to like grow and like take strategic decisions that will have like mid to long-term positive impact on the company. Sometimes with your public, I think it's well known that like, unfortunately you tend to have decision makings that are biased a bit towards like making the next quarter look good. So whether it was true or not true for us in the past, it's certainly something that we can carve out our energy really focusing on what matters for our customers. And that's the greatest difference.
So Amber Capital allows you to go into midterm to long-term vision, because you no longer have to deliver on every half-year results.
Exactly. Midterm, long-term vision is probably one of the greatest change. And obviously the other changes is like we've been doing a lot of M&As over the years. And I think Amber liked that about us, and as a platform to do more of those M&As. So our activity on that front are just going to be ramping up over the years and having some more transformational acquisitions that should become possible.
Now you get me curious. So anything in the pipe?
Yeah, there's a lot in the pipe, actually. There's a lot in the pipe. Nothing that can be really shared today, but tons of great opportunities. The market is active.
Not that I expect you to give me a name, because I know you can't share that, but something which might move before the end of the year?
I hope so. I certainly hope so. And I think that they before the end of December would be happy to announce our first transaction before, celebrating the 1-year anniversary with Amber. That's December 8th. So I think we're pretty close to being able to make some announcements, yes.
And in between, the announcements, of course, happened with H2 Innovation's acquisition of Nextera. Now discussing H2 Innovation, a water systems specialist, and Nextera, a distributed water player, makes for a very smooth transition to my sponsor today, Simple Lab. If like those two you're in the water industry and you're running a water quality sampling campaign or tweaking plant process performance, Simple Lab has you covered. You can easily order online from over 275 commercial labs, which simply makes it a one-stop shop for everything from routing testing kits to specialized analyses like PFAS or microplastics. Say goodbye to juggling multiple labs and complicated logistics. You get a single, streamlined process for ordering kits and reviewing the results. Plus, there's always a real person to talk to. So if you're tired of cobbling together lab documents and quotes and services for each new requirement, or you just want to try a new way for more efficient testing of water samples, check out Simple Lab. And if you don't know where to find them, just click on the first link in the description. They're all about making water quality testing, well, simple. So head to their website, line up the test you need, hit order, and let them handle the rest. My personal thank you to Simple Lab for being my sponsor today. Check them out. It will help you and it supports my work. And back to me. So 300 million last public numbers before the privatization, which now gets you into this kind of calm as long as you keep your KPIs right. What's the 2030 vision? Where does it take you?
Some of the things that we've discussed internally, we would like to see the company grow at a size that is not necessarily, in terms of dollar figures, but represent a much more important market share. And so when you think about water, it's highly fragmented, right? So you got the $50 million and less, type of companies, and you got the $1 billion and more. And like anything in between is fairly scarce. So we're kind of like in that position where like we definitely like to go and play up there in the big league. So, is $1 billion the figure? I think that those numbers are certainly achievable for our trajectory right now. So $1 billion in total valuation, $1 billion in revenues. What is it going to be? But like all the executive team is really focused on bringing us somewhere around there. Yeah.
So a model for you might be Ski on Water.
I don't know. I mean, I have a lot of respect for Skyon. What they're doing is impressive and amazing in a lot of ways. Kudos to them. I think we're quite different because H2 Innovation is an operating company, right? Skyon Water is agglomerating a portfolio of companies.
But the first piece or main piece they gobbled up was Ovivo when they were roughly 300 to 400 million-ish. So kind of the stage you were when Amber went on to take you on that journey.
Yeah, you could say it that way. And I would say that Ovivo is a good example of a company that has strived under the ownership of Skyon. Would we be comparable to Ovivo? I think what we're achieving or trying to do is slightly different, of course. Amber could be compared maybe to Skyon Water, in that sense. H2O, as a sort of a fast-growing company could be compared to Ovivo. That's probably fair. I mean, I think that we are active in a very, very attractive market space because we have operations, because we have a lot of recurring revenues. The vast majority of our revenues, well over 80% is recurring in nature. And also because, the type of projects we do are sophisticated in terms of achieving some complex treatment trains of reuse and industrial. So when you look at these things, and also with the fleet, right, that we've deployed and investing our own capital in making, a fleet available for rentals and or purchase, but, making quick deliveries to the market. All those traits are making us a fairly phenomenal growth vehicle for investors such as Ember.
So as we've seen with the Nextera example, one of the ways that H2 Innovation becomes a phenomenal growth vehicle for Ember, to quote Guillaume, is that they will grow externally and consolidate the markets by gobbling up promising growth stage companies. That appetite for external growth, in turn, is something that's usually part of the specialist water VC's investment thesis, as it mechanically builds an exit route for their portfolio companies, as Clayton McDougall from Emerald Technology Ventures recalls.
We typically model 4 to 7 year exit period when we're doing an investment. Our current water fund, we kicked off in the summer of 2020. So it's going to be 5 years old. Hard to imagine, time flies, but it'll be 5 years old coming up this year. We're looking at raising a second water fund as we speak. To help our existing and future companies as well. And so our first investment out of our existing water fund, Sophie Filtration, was done towards the end of 2020. We didn't do any in 2021, mainly due to valuation bubble. And then we've done quite a few. I think we're at 11 that are public right now with our existing water fund. And then we have 1 or 2 from our legacy fund before we launched the water fund. When we look at exit landscapes, we talk with our portfolio companies on a fairly regular basis, even though it might not be happening for another 4 to 5 years. Some of the ones obviously we just invested in, but just getting the teams thinking about it, right? Getting the right documentation, everything in place. And so when we talk about exits for our existing portfolio, we're not going to force or try to force an exit because of our modeling. It needs to make sense for company, the acquirer, certain milestones that need to be hit, right? And depending on timelines, it could happen this year, it could happen next, it could happen in the coming years, right? So we have those discussions on a recurring basis, but wait till the time is right. We look at investments as a partnership. So the companies that we're marrying, so to speak. We're in it for the long haul, and we don't exit just because of a financial timeline or a financial model that we put forth 5 years ago.
Now, water being a special animal where timelines can stretch, and often will, it's also a space where you'll have to learn, as Alex Lukopoulos puts it.
Water needs a lot of education, which is why we do it with Colombia. And you need the puzzle pieces together, and you need to educate.
Who do you need to educate?
As many people as possible. Because water, again, it's a Rubik's Cube. I don't think there's anybody who doesn't need to be more educated in water. Those are the two central points. Then you can begin to bring more capital, bring more people, and have impact.
Having impact, thanks for the transition, Alex, because that's exactly what we'll cover with Maria Gotch, who's CEO at the Partnership Fund for New York City, which I could define you, but I'll let Maria do it.
I run a nonprofit impact fund called the Partnership Fund for New York City. It's backed by the major corporates in town, and we have a mission to create jobs and grow the economy. And one of the key areas that we focus in is technology in the public interest, specifically helping municipal government get access to new and cutting-edge digital tools. Municipal government is not typically an entrepreneur's first target market. Certainly, the venture community doesn't like to fund necessarily tools that are going to be sold to local government. They'll fund defense, but local government's a different animal altogether. We, I believe, have cracked the code on how do you, in a expedited, organized way, bring innovation from younger companies, which is where most of the innovation comes from, to large government municipal operations. So we run 3 programs. We run one with the region's public transit agencies called the Transit Tech Lab. We run, just launched a new one with the city's Department of Buildings, which oversees the construction and all the buildings in New York City. And relevant to this conference, for the last 2 years, we've been running the Environmental Tech Lab, which is a partnership with the city's water utility, the New York City Department of Environmental Protection, or DEP.
What is an example of what the program is doing in concrete steps?
If you're a small company and you do not have a large staff, your ability to get in to talk to the right person within something like DEP takes a lot of time and effort. It's very haphazard. Maybe you meet the right person, maybe you don't. It's not their job to look at innovation. Their job is to make sure we have water and wastewater treatment. And so that cycle of it's highly inefficient, we all like serendipity, but not when you're doing sales. You actually want a repeatable process. And there's really if you're just showing up on your own, there's no process for which they can evaluate you. If you then try to use a lobbyist or other political relationship to get a meeting, that's probably the worst way to get in, because then it feels like you're being forced. You're forcing yourself on them. We've created an open process for anybody to apply, not public companies, but again, for the smaller companies. And we engage the operating staff that actually has the issues for which they're looking for solutions. So their job is to deliver the water, is to deal with the wastewater treatment, deal with the noise pollution. The thing about operating people is they know what their issues are. It's less about, I know the technology that will solve my problem. It's, here's my problem. And so we then basically aggregate the problems, publish them, and say we're looking for solutions for those problems. So it's kind of reverse procurement.
So you're starting
with the problems.
The problems
from the operating people.
So there's an identification round where you're going with them, sitting together and say, what is your bleeding that type of issue?
What keeps you up at night?
Okay.
Yeah. And then we go to the venture capitalists and the entrepreneurs and say, what do you got? Come show us what you've got. So different from procurement where it's very spec'd.
Yep.
This is
reverse spec'd.
Yep. Reverse spec'd. And what it allows for is a different approach, an approach or technology that the operating people are not aware of, or a different way to solve the problem that they hadn't thought about. And that's what entrepreneurs do so well, is come up with a different way of doing things.
And so is the aim to directly go to a sales, or would you first trigger a pilot?
If you're going to go directly to sale, that's called procurement. And that doesn't allow for discovery and testing. Once the operating people review the people that apply.
Just for me to understand that one, that means that you are gathering the problem, going out to the VCs, going to the entrepreneur, bringing them back, but you're not the one evaluating. You're bringing it back to the same operators and say,
correct,
look at it.
Yes.
Okay.
So it's the operating people that make the decision about what's relevant to them or not. And then they say, all right, this is interesting enough for us to want to learn more through an 8-week proof of concept. So depending on the technology, it could be a scoping exercise or it could be an installation. But it really depends on what can you get done in 8 weeks without running afoul of cyber. If it's a lightweight thing, it's easier to actually do an installation. If it's a heavier thing, then it's more scoping exercise. But again, you're doing it with the relevant operating people that could be the users of that product.
How do you fund the proof of concept?
There's no payment for the POC or the pilot,
Okay.
which keeps it out of procurement. Then the onus is on the entrepreneur to scope something that is narrow enough that's not going to be too onerous for them while being able to show the benefits of their product. But a good entrepreneur knows how to do that. At the end of the 8 weeks, the same operating people have to make a decision about is it good enough and interesting enough and impactful enough to do a year-long pilot. And then at the end of the pilot, there's a decision about is it worth then going on to send them through procurement. Although it's an unpaid pilot, what the entrepreneur gets, the quid pro quo, if you will, is they get immediate access to the operating people that are relevant to them, and they get a defined process with deadlines and answers. In a relatively short period of time, you know if your solution is of interest to the nation's largest water utility.
If I'm trying to be the devil's advocate now, because I love the approach, there's the thing in growth stage water companies that they often face death by piloting.
Yes.
And honestly, I've very, very, very rarely seen a pilot that's not successful.
I have.
Okay.
Plenty of pilots are not successful. Or ultimately success is it is compelling enough that they move you to procurement immediately. That is success. There's a lot of other things that are called success. It shows it does what you say it does, but it doesn't provide enough value to the customer. It doesn't save them enough money. Or it doesn't really change it. On the margin, it's good, and yes, it did, but it's not worth the disruption of bringing something new in because it didn't change things enough.
I think that's where we don't disagree at all. It's the definition of success. Very often, if you boil it down to what it sounds like, it's before starting, you should sit together with the operator and say, what does success look like?
Absolutely.
What are the KPIs we want to see? On one end, that's the moment for the operator to say everything he wants. But on the other hand, it's also a point for the startup company to say, if we hit those targets, then you're going to commit. And that's usually a two-sided process which is neglected, which leads to successful pilots, but success was not defined and there was no commitment to what happens if it's successful.
When you're dealing with a public sector entity, different than a private customer, you can certainly do the agree upon the endpoints, but they cannot commit without having gone through procurement in most cases. It will definitely then move into procurement. It's a little trickier. So within our process, we have not solved that last piece, which is to move directly from a successful pilot to automatic procurement. We're working with the city to create a legal structure to do that. So stay tuned, but it doesn't yet necessarily translate that to that. So that's why the entrepreneur has to do a balance of the scope of the pilot to show that it can work. Now, for the New York City-based companies, if a company is selected to do a pilot, they can come to us and apply for investment capital of up to $500,000 to help fund the company during the pilot. We're restricted to investing just in New York City, so that money is just for New York City companies.
And do you invest for equity or you invest as a loan or what's the...
No, at this stage, we're equity investors. It could be structured as convertible debt, but it's equity risk.
Okay, so you're investing proactively in the company and you become a shareholder of the company.
Correct, yes.
Would you have an example of a company who went through that and a project who came to a positive term or is 2 years too short?
So we've now done one full cycle. One company was selected to do a pilot. So that pilot has been underway since the summertime. 3 additional companies, they got done with the 8-week POC and DEP said, oh, very interesting. We're not going to waste your time and do a pilot because we understand what you can do. And it's interesting enough and it's a big enough solution you're bringing to the table that's going to inform how we're going to go procure. So that, in effect, that concept is getting moved directly to procurement as part of a bigger capital plan. That company invested 8 weeks, and now they're sort of teed up when the RFP comes that they can apply for that.
Can you name the company?
I can name the type of technology.
That would be great.
A technology that can use AI to review photos taken during sewer inspections to replace a human being looking at that is the example.
A US-based company?
There were actually several companies.
So it was not Sewer AI.
Again, they're not. Sewer AI was selected to do a POC.
I had Vapor on the podcast, which is an Australian company doing similar stuff.
Yep.
I'm just out of curiosity. I find the concept super cool, so that's why I'm...
Both Vadar and Sewer AI were selected to do POCs.
Okay.
And based on the results of the POC, DEP said, wow, this concept, using AI to evaluate photos, they're going to consider doing an RFP, which now anybody can apply to, right?
I don't want to push in a corner. It's just...
public sector procurement, it is a very particular thing.
Do you understand you right? We're a non-profit social impact fund?
Yes. So we're the investment arm of a group called the Partnership for New York City. That is the organization that was set up by David Rockefeller coming out of the financial crisis of the 70s to convene the business leadership of New York. So the members are the CEOs of the 300 major employers, and the partnership is the vehicle that brings the views, the expertise, and sometimes the money of the private sector to engage with city and state government. Our fund was raised in 96, 97 by Henry Kravis and Jerry Spire from the business community. We are structured as an evergreen fund, which means...
That was going to be my question.
We have their money for 45 years. The deal with the investors was we would preserve capital, make enough to pay for expenses, so it was a one-time ask. And at the end of the 45 years, the idea is we give the money back. And in the meantime, we make investments. So we've the funds raised are 130 million, but we've invested 200 million.
Awesome.
Yeah. And we play this very interesting role because we're this basically a nonprofit, that we can pull together very interesting elements of the private sector working with us alongside government. So for example, in this Environmental Tech Lab program, we have a couple of regular venture capitalists who our full-time job is to find the best technologies and make money off of them. We bring them in to review the finalists because we're interested in their perspective on, is it a fundable company? Because there's no point in DEP spending a lot of time with a company that may have a great technology, but a for-profit investor, which is critical to that tech company's future, would look at it and go,
Water is everywhere but nowhere. It's literally what you just said, because in the capital markets, it's everywhere. People want to do it, but it's nowhere because the numbers prove otherwise. I think the reason it's everywhere but nowhere is because it's complicated and it's small. And a lot of larger institutional investors are not built to simplify and scale. I think that's why it's important as a asset management community, as an industry, to simplify, organize, and scale, and just do that and do that over time. I think the other point with water is it takes longer because you have multiple constituents. So if you solve the simplification, organization, scale, and understand the longevity or the fact that water may take a little bit longer, or truncate it as best you can when you can, I think that will start to chip away at that. This has happened in other industries and other problems in the past. These are things that are solvable. I don't think we have a can we solve it problem. I think we have a can we solve it quickly before it becomes a bigger problem. And that's part of what we've tried to do and try to communicate and try to message in our Rethinking Water as an asset manager, rethinking asset management, right? Rethinking how we communicate with investors, how we communicate with portfolio companies, how we communicate to the general public, and how we educate. We partner with academics, we partner with policymakers, but you have to fundamentally solve the simplification and the time duration element with water. It's infinitely solvable.
But out of those 900 something, 750 cut one check.
Yeah.
How do you explain that?
Part of it is duration, which needs to be messaged because water is complicated and multi-stakeholder, so it tends to take a longer duration. I think a lot of those investors were probably mismatched on that. You need simplicity, and some of those ideas and projects, were probably too early or too complicated, and they didn't have organization and everything else. And I would say the last point is a lot of those over the last 10 years didn't have a company in the middle market like a Science or some of the other ones that are now approaching this market to sort of commercialize those successes in growth equity. In growth equity, you need an ecosystem to be able to drive those investments to scale, to profitability, to other mechanisms. And the water sector just didn't have a lot of those. I think that's another thing that we're trying to do is create this ecosystem that can push a lot of those investments, because you could have billions coming in the early stage, and you may have very successful, big publicly traded companies trading at great multiples and having great growth. But if you have nothing in the middle, you're sort of stagnating. And that's a good point that you made there. And I didn't realize those are staggering numbers. I think the sector's changed a lot, certainly since we've been involved. Now it's 10 years, but it's changed dramatically in the last 5 years. So you can't put the same lens that you looked at water 10 years ago today. As an investor, as an operator, as a public policy maker, the world is a different place.
Water is actually at the beginning of its S-curve. Water technology is at the beginning of its S-curve. I think we've talked about this before, which is basically like water technology has been around since Sumerians, right? Of course we've been manipulating water for a really, really long time. But just like a technology, whether it's anything from like AI to generalized IoT to mapping to like whatever it is, everything goes through an S-curve where at the beginning everybody thinks it's a garbage idea and nobody's invested in it, and then some investments are made, and then progress is made, and then it comes up in terms of the degree of attention, and then it gets through to a level of maturity, and it just sort of it levels off, but it is accepted by the market as a destination for capital. Like, you're not an idiot for going to invest in that thing. And we are just at literally where the bottom of the S-curve is lifting off the X-axis. This is not the beginnings of a bubble. It is the beginning of a realization that when you have a 1.4 or whatever the hell it is going to be this year, like $1.4 trillion market that inexorably can only go one direction in the context of climate change. And you have now a totally different like caliber of entrepreneurs. So like broad-based, we've always had brilliant people, but broad-based caliber of entrepreneurs who are starting to build vehicles of economic value, which is really what startups are. Like, we're just seeing the beginnings of that, because the S-curve also tells a story of the recycling of talent within it in individual verticals. At the moment, like our best performing companies, they're getting some people from within water, but they're often bringing in people who are from outside water, who are doing water for the first time. After that, those people and the people that they train and work with, if you get to an exit event, they will take that and hopefully they'll stay within water, but they'll then cycle. There's this huge, really important recycling of talent, which we have some of, but not a ton. But we're just at the beginning and seeing these acceleration factors just begin to play out.
I always talk about Tom Ferguson. I just listened to him literally 5 minutes ago, and he continues to believe that there is a moment in time now where the entrepreneurs and the opportunities there for us investors are better than ever. And I agree with him on that. And I also think that we as specialist investors in this space are so much better off than impact investment in general. My next gig will be to kind of pound on them.
And regardless of Brian Iverson pounding on impact investors or not, one thing's for sure, his numbers actually speak for him.
Our first full exit was a 40-some% internal rate of return. We had a partial exit that was a 2x. We have in our current portfolio, if I had to pick what I think is going to be the best outcome, it's going to be 4 or 5x inside the next 18 months. When all that is playing out, I think finally you get investors and track records that makes it obvious the opportunity that the rest of us seen for a little while, and then the capital will come. I do think we are at an inflection point, and I think it's being proven out as we sit here.
What proves it?
The results. You didn't have anybody 5-10 years ago that could show up with a track record of wins. We'll find the third time to sit down, and I will prove it at least with my own track record. We promise our investors a 20 to 25% internal rate of return, which is private equity plus, effectively. And that's what we're giving them. And I'm happy about that. I'm confident we can continue to do it. And I'm starting to have a full proof that I'm doing it. And that is new, I think, in space.
But then why does PE still sit on the sidelines? To quote one of them, which I had on the microphone today, as long as it doesn't make Bloomberg type of news, well, I'll wait.
And it's true until it isn't. I know what I have, and I do think what we as investors currently isn't. I think it's new. So I think it's happening now. You're right. I mean, the big investors, the larger capital investors, they will sit on the sideline until they have more proof. But I can also tell you that the conversations I'm having this week with much larger private equity players is that they all have an interest. And they have had that for a while. I mean, if you spoke to somebody 5 years ago, they would also probably have said that they found water interesting, but they don't quite know how to do it yet. Some of that echoes still. When those of us who's already in it can show up with a sheet of paper that says, we have been here for a little while, and maybe we haven't put the capital into play that you could, Mr. Big Investor, but we have actually gotten those returns that matches whatever you got in renewable energy, whatever you got in energy, then they will listen. It feels a lot like renewable energy 20 years ago. I can point to several private equity firms, including one I worked for years ago, who were laughing at the renewable energy guys, called them tree huggers. I was one of the tree huggers in that group. And then 10, 15 years later, you go to the website, it's full of renewable energy pictures. It's offshore wind turbines all over the place. And frankly, some of the deals that was laughed at back in the day, everybody is now bragging about, because of supposedly 30 people who made the same deal because everybody's talking about it as such because it went well. That's going to be the case here as well. So when we sit here 5 years from now, you and I, and we are on episode 18, then we will go back and I think we'll see some of the same pattern. So I think we are at I'll say it again, I think we're at an inflection point, and it reminds me about renewable energy. Because renewable energy, there was also a bunch of mistakes up front. As I've said before, the first wave of investors who still think of it as the investment thesis into a new area, renewable energy at that time, water now, it's exotic. Because it's exotic, you make decisions you wouldn't have if it had been just investing in a company down the road and you applied all your normal investment acumen and business acumen. You take chances. First wave gets run over. That's what happened too. Some of the best investors in the space now who survived it, they still made a lot of mistakes in the beginning. Now we are here with about second or third wave of investors in water, and we learn from the mistakes others made. We are more cautious, and we are now proving it out. That's exactly what happened in renewable energy. And renewable energy now are making investments and investment returns that matches what is done in energy. Sometimes it's even better. That's what we're seeing here.
It feels wrong because I have to be the contrarian. When I fully agree with you, I stick to my contrarian role. I don't know if I talked to you about Carl Michael Millewer the last time we spoke. I interviewed him maybe 2 years ago, and when I interviewed him, he had 35 companies for sales. Like he's representing them and looking for an acquirer. I met him again this year at the Pure Terra LP days. I just watched his website and saw how many companies he had, and he had 105. Sounds to me like the opportunity to flip over a company is bigger than it has ever been. Mm-hmm. I'm wondering, what's the bottleneck? What makes that Carl Michael has still 100 companies on his hands? Is it a lack of investment, or is it a lack of know-how in taking that company and flipping it over or taking it to the next level?
Clarifying question. These are all small companies?
Mom and pop type of companies, yeah.
A lot of the mom and pops are not going to survive the changes in our industry. Most of them, no disrespect, probably lack the sophistication to be more than a small company. I think you will see a lot of small companies having issues and disappearing, and I think that's in some sense a shame. But it's a very fragmented industry, and it has to consolidate, and changes will happen. My slow-moving tsunami comment with all the opportunity, I mean, it is going to run people over.
Running people over is the sort of negative way to put it. The flip side of that coin is that consolidation is another name for external growth and might be the way to build new giants.
When we come to conferences like this that are more investors focused, it's basically to understand what the trends, of investing in water, sharing our own thoughts, and of course, meeting some potential targets. The crowd of the investment conference is very broad, from like the startup stage all the way to like very, very mature investors. So by being that sort of mid-sized player, it's a very interesting place to make contacts and interact on, where we're going to be in 10 years or what kind of growth vehicles we could be acquiring or thinking of acquiring.
Do you need target suggestions?
Oh, we're always open to target suggestions. Absolutely.
I might have some ideas for you.
Please share them.
I might have shared some with Guillaume. Who knows? Now, I beg your pardon, but I also need to be the party pooper. But how much of that is wishful thinking? I want to believe. Yeah. Everybody I meet wants to believe. So now we believe it's happening because we want to believe. But maybe it's not happening.
No, that's right. And I understand what you're saying, because like this, second generation biofuels is always 5 years away. But it still is always a new idiot who's spending a lot of money on it, but it never really works. So yeah, maybe it is just because we're in the moment, and we, as always, you think this is the moment where things are changing. Honestly, only time can kind of tell us that. I would still spend a lot of time defending my position simply because I do think conferences like the one we're at, the attention it's getting, the issues we have around climate and climate change and too much water or too little water, it is new. Like, we haven't had quite the same level of issues. We haven't had the same attention to our industry even 5 years back. Whether it's fully the moment and it's peaked and this is when it climaxed and everything kind of gets better, I can't tell you, but I can tell you it's new. This is different. And I think we all feel that. I'm speaking to very large investors and they call me. It's not just me getting 15 minutes to let people know that I think that it's a good idea to invest in water. It has to start somewhere, and it's starting with interest from those who can put real capital to work. That interest exists now. It didn't when I started doing this 8 years ago.
You know, we have this open riddle in the water sector that if you look at growth stage equity, which goes with a climate or ESG aspect on it. So when people want to invest green, 0.5% of that money or 0.7%, depending on the numbers you look at, go to water. On the other hand, when you look at what private investors seem to be attracted to, 78% of them on the world average say that they have an ESG mindset, so they want to invest with ESG as a driving force. And when you ask them what's the number one topic for you, water comes on top everywhere around the world except Japan. So Japan is a different beast, but outside of Japan, all the other countries, water comes on top of the investors, so private investors. The thing which doesn't connect is what can they do? I mean, they can go on the stock exchange and then they can only trade what's there. And water companies, you don't have so much on the stock exchange.
Certainly, yeah.
So they go through funds. Funds have to raise money, as you just rightfully explained. And if it's not top of the agenda, it's going to be too much of an effort for you to raise money. It's kind of a different circle. What can we do to break the circle?
Having some exciting exit in water would absolutely break this this doomed circle in a way, and also getting something interesting and something that catches attention in water. Now, unfortunately, the United States has this paradoxically strange situation with water, which is very fragmented, very chaotic, which doesn't really facilitate technological innovation. It doesn't facilitate startups because you have tens of thousands of companies. So if you have a startup, your costs of marketing and selling a product become humongous. I think it's a question of getting interesting technology. There is interesting technology. I mean, I saw an article very recently from the King Abdullah Design Bureau in Jordan, where they developed some new technology to condense water from ambient humidity in the desert, which seems to be extremely promising. That is the type of things that we need to get into the news, and we need to start getting VC funding. It actually has to start at the VC level, and you need to get these water VC ventures funded, and you have competition. You need to create buzz. I think that's really the thing. And it's not going to happen at the utility levels, because as you said, the utility levels are the base of the pyramid. Yes, it's foundational, but it's not exciting.
In terms of buzz, a big thing happening. Last year, the water sector got its first unicorn with the fundraise of Gradient with their Series D. So that's something.
Helps.
Is that the type of thing which moves the needle, or?
No, I think it certainly helps, and it certainly is moving things in the right direction. And I think also the increased awareness of the impact of climate change on the water, the hydrosphere in general, is slowly but surely moving the needle in the right direction. So I don't think we're going to see a watershed moment, to use a water analogy, where things are going to pivot from one day to the next, but I think it's more of a slow but steady move in the right direction. And the fact that there's been a first unicorn is a sign that, yes, things are going in the right direction.
But do we have a chicken and egg situation? Because when I spoke with Tom Ferguson from Burnton Ventures last year in New York, a part of his investment thesis is that on the exit side, funds like you or larger companies will enter in and want to beef up their water tech arm, and hence offering one more exit route, which makes the perspective of having dedicated water VCs much more viable because they can grow to something. And you're saying that you need the water VCs to have more of them and to see more of that base level stuff happening for you to get interested in entering the field.
Yes, I see what you mean by the chicken and egg thing. At PE level, you need to have a healthy deal flow coming from VC in order for that to be something that you can sell. If there's only like 2 or 3 plays in the VC space, those might just blow up, and then you're sort of left with nothing. You don't have enough critical mass to build up an ecosystem of investors, an ecosystem of interest in it. So it's really a question of building up this mass. So unfortunately, it's something that has to start. It's there in a way, but it's not getting a lot of exposure. So there is a lot of things happening. There is a lot of interesting technology. There is a lot of interesting deals, and they're not really getting traction, funding, and media exposure because of a multitude of reasons. And typically also because many times it's not on markets that are particularly followed. A lot of water tech and water work is for emerging markets. It's with the exception maybe of sustainability themed investments and things like that. That's not a market that generally gets that much coverage. So unless you're focusing on the US or Europe, if you're focusing on the African market, which has a dramatic need for better water infrastructure, better improved water usage and all, better water recycling, all of that, these are places where there has to be more incentives. They have to be a water X prize. There have to be these types of sort of additional pushes so that type of market gets the service that it needs, and then the technology can then be pushed and grown and used elsewhere.
So when a water equity raises about 100 million for the first close of their fund and proves a 21-to-1 return on investment in the dollars they put into this access to water, it doesn't make enough Bloomberg coverage to attract the rest of the non-specialist scene. So we should be lobbying Bloomberg for them to cover the sector more.
I think you've nailed the thing. That is a type of news that should be front page and is typically not. If you had that type of return on some tech thing or some other type of technology, it would be trumpeted all over the place. Because it's water, that's not particularly relevant. That's the thing. I think it's not a question of the technology and the investments not being there. It's a question of the awareness not being sufficiently brought up and publicized. Awareness needs to be built. The technology is there. The people doing the good work are there. The investors are there. They're on the sidelines. They're sort of, but investors are very much wed to groupthink. When something becomes fashionable, they all pile in. The chicken and egg here is we need to make water become fashionable, and then it solves itself. I think the real question is, how do we make water fashionable? How do we make water sexy?
Well, I might be biased, but my answer would be subscribe to this podcast, and over time, you'll get to see the water ecosystem as I see it. And trust me, it's very sexy to bear with Robin's adjective. Anyways, that's the end for today. I hope you enjoyed that exploration of the many layers of the water investment cake. If you'd believe that's of interest, please take this episode and share it with a colleague, a friend, your boss, or your team. Once again, a big thanks to my sponsors today, Science Water and Simple Lab. To check them out, have a look at the links in the description, and I'll see you next week.